Hello, everybody, and welcome back to another segment. Today I have Matt Alexander from Farm Lending Canada. Matt, how are you doing?
I'm wonderful, thank you. Thanks for having me today.
Awesome. I am excited to chat with you today. Before we dive into the subject of our conversation, can you tell us a little bit more about who you are, what you do, and your role with Farm Lending Canada?
Most certainly. Again, Matt Alexander at Farm Lending Canada. I'm the Director of Finance, Operations, and Investor Relations, in addition to being a registered dealer rep for Belco Private Capital, who is an exempt market dealer. So one of the main functions of my role is to be able to evaluate and assess the investment initiatives of our potential investors and go through the onboarding process with our potential investors and then keep in communication with them throughout their investment time with us. In addition to that, I work with our external professional service providers, including our fund administrator, our mortgage administrator, legal team, auditors, other financial partners, in order to ensure we have accurate, timely, and effective reporting to all stakeholders, as well as supporting the entire team here at Farm Lending Canada.
Okay, excellent. Thank you for that. So, we're going to be talking about AgriRoots Diversified Lending Fund in conjunction with Farm Lending Canada. So, why don't we step back up and can you tell our audience a little bit more about Farm Lending Canada and when the company was formed? What was the mission and vision?
Yeah, Tracy, thank you for the question. So, Farm Lending Canada was created back in 2019, but really it was a shared vision between a couple of the founding principals, both Rob Nelson and Sean Buston. So, has been working in the mortgage broker market and private lending market for in excess of 25 years. Sean was doing the same, but doing it from the credit union financial institution background. So, both the partners had worked together in order to be able to fund various deals, whether it was through the credit union or through private investors. But what they were finding is that through changes in the financial system, it was becoming harder and harder to be able to fund some of the alternative mortgages for local farmers in need. So what they were finding is there was continued gaps between what the farmers were requiring and what traditional lenders were able to do for them. And I mean, the constraints were coming from changing in lending policies, tightening of regulations, the consolidation of the credit union space, and all of these things were not meeting the evolving needs of some of the Canadian farmers. So given this, they recognized the gap and they were driven with a respect for the Canadian agriculture and food security system in order to be able to launch AgriRoots Diversified Lending Fund LP. As I said, we did that in August of 2019 with a goal in order to be able to attract investment into Canadian agricultural mortgage space, provide responsible alternative financing to farmers, and create a benchmark for how ag-focused alternative lending should be delivered to Canadian farmers with transparency, professionalism, and providing positive impact.
As you mentioned, there's Farm Lending Canada and then AgriRoots Diversified Lending Fund. Now, today we're going to continue that conversation and we're really going to dive into AgriRoots, right? Do you want to talk about how that fits in with Farm Lending Canada, as you touched on? And then what is the core investment strategy for AgriRoots?
Okay. So Farm Lending Canada, which is our management company, it's what we do in order to be able to originate, underwrite, and source the mortgages. So we do that under the operating name of Farm Lending Canada, and we are the manager of AgriRoots Diversified Lending Fund LP and AgriRoots Diversified Lending Trust. So a little bit about that is the fact that our fund structure is a mutual fund trust layered on top of a limited partnership, which allows us to be able to bring in both registered and non-registered funds.
Okay.
So within those, as part of my dealer rep role, I onboard investors who are either accredited investors who are eligible into our main LP or our limited, our mutual fund trust has an offering memorandum which allows investors in order to be able to enter through other exempt market exemptions. But that is all kind of dealt with in the evaluation process in order to be able to ensure that the investment is proper for the individuals. So
Okay.
that's a little bit of kind of the breakdown between what is the entity known as Farm Lending Canada and what and how these all relate.
Thank you.
I mean, as far as the key investment strategy, because AgriRoots Diversified Lending Fund is the main investor into these mortgages.
Okay.
But the guidelines that are in the structure that Farm Lending Canada is looking to provide these mortgages to AgriRoots is that the fund's investment strategy is to invest in short to medium term alternative financing alternative financing. So 6 to 36-month mortgages to Canadian farmers were kind of in a stage of transition. Where capital is obviously often used in order to be able to bridge borrowers from their current situation into a more permanent financing solution with banks, credit unions, or Farm Lending Canada.
Okay.
We structure the mortgages to ensure that cash flow during the term while giving borrowers room to execute their business plan. Our underwriting team evaluates every opportunity based on multiple factors, being the quality of the collateral, the historical performance of the farming operation, proposed or operating plans in order to be able to continue, and I'm sure what Sean would have mentioned, a specific catalyst that enables our borrowers to exit. So when we're taking a look at the mortgages in our strategy, these are the things that we evaluate in order to be able to determine if it's the right approach and the right investment for our investors with AgriRoots.
Okay. Excellent. Thank you. That makes a lot of sense. So how does this differ from other mortgage investment companies or mortgage investment entities?
Yeah, so I mean, structurally, MICs and MIEs are relatively similar. I would say that, individuals that are familiar with those type of products and investing in alternative mortgages would see us quite similar. However, I think our key differentiator is our specialization. As much as, everybody's investing, all of these entities are investing in real estate and mortgages. Our key differentiator is the fact that we're investing in the Canadian agricultural sector. And other MICs and other MIEs typically look at residential or multi-use real estate. I mean, for us, agriculture in Canada represents a lot of unique opportunities. For us, we value our experience and our expertise in quality underwriting, valuation, working through operational challenges that other lenders really choose to avoid. In order to be able to do so, it requires in-depth knowledge of land valuation, commodity cycles, commodity prices, farmer cash flows, as well as other areas that these farming families need to be able to focus on and the things that they're going to encounter during their annual operations. The 100-acre Ontario farm that was supporting a farm family just doesn't exist anymore. Those would be more classified as a hobby farm. These commercial operations are growing in scale and growing in need and require external supports in order to effectively manage their businesses. So, we also deal with any restructuring or efforts in order to be able to realize in the property if things are not working out. And we need to be able to do it with sensitivity and a strategy that supports the Canadian farming industry, and we completely support that.
Okay.
Now, this specialization provides our investors access to a historically stable and underrepresented asset class. So Canadian farmland has seen remarkable consistency over the last 70 years. So over the last 70 years, there's been only 3 instances of negative annual growth in Canadian farmland. So even though we've had significant economic events, even over the past 25 years, being economic downturn in the markets in 2008, we've seen COVID changes, we've seen 2022 inflation shocks. You take a look at those events, and other values have been dramatically affected, where Canadian farmland since 2000 has been reported annually with an 8% annual growth rate over the past 25 years, as reported from Farm Credit Canada. So, I mean, we look at the access to the agricultural asset class being a key differentiator for our fund.
Okay, excellent. That's exactly what I was thinking about too when you were talking. I'm like, land's always been a very safe investment compared to when you look at the horizon, right? It's always been
Mhm.
appreciating. So,
Definitely.
okay, excellent. So, your investors that you're speaking to, why should they, you touched on this, maybe you want to go there a little bit, but why should investors be excited, look to investing in Canadian agriculture? Do you want to go further into that?
Yeah, I mean, in addition to, I think the overall investment strategy being that, what we feel is it's supporting a key factor in our Canadian industry and landscape. So, in addition to it being stable in land values, we do feel that it's a feel-good opportunity in order to be able to invest and ensure that your investment dollars are moving Canadian farming forward. So that's one. And two, we have, I mean, strong returns and consistent returns. So, in typical lending and mortgage, um, the lender is setting the rate. So you kind of know in advance of where your returns are going to be, and you can have some relative consistency in the returns that investors are going to see. And in this agricultural sector, there's some inflation protection. So as inflation is happening, food prices are increasing and land values are increasing with inflation. So that correlation kind of helps protect our investors in inflationary periods to ensure that the underlying assets are also increasing alongside inflation. Government support is a large reason why we believe that Canadian agriculture is a very stable investment through different situations, whether them being international trade issues, whether it becomes environmental changes or catastrophes. The federal and provincial governments have continued to be able to step in and help Canadian farmers in time of need to ensure that there is some stability in their operations. So I would say that all of those are contributing factors. And I guess one last one that I would like to mention, and one of the real reasons that we feel very supportive of this industry is the fact that the character in Canadian farmers is second to none. The individuals that we lend money to will do anything in order to ensure that their mortgage and their land stays in their name. A lot of these individuals have been farming within their family for 100 plus years. This property is near and dear to their heart, and we want to support that.
Isn't that the truth? That is a good point. Yeah. Farms are multi generational. So that person is committed to their operation, right? They're not just like, here's the keys. It ain't
Yeah,
happening that way. Excellent.
definitely. I guess you know what, and I would like to throw one more in there. I think for investors in our fund would be extremely benefited to know that, I mean, our leadership team believes strongly, so strongly in this that, we're invested directly side by side with our investors. Our directors are extremely aligned. We have over $20 million personally of our funds invested alongside our investors in these funds in order to be able to, assure alignment.
Okay, excellent. So I want to ask you another question just to clarify who that investor is. Because in previous segments we've done about Farm Lending Canada, we're speaking to the farmers in our audience, the business people, the companies, everybody. So we raise awareness of alternative lending solutions through Farm Lending Canada. Now we're talking about the lending fund that funds those mortgages. Who is your typical investor? Is that farmers, anybody? Do you want to speak about that a little bit?
Again, in addition to the directors themselves
Yeah.
who put in the capital in order to be able to help launch our fund and get us going, they've brought in additional friends, family, and as word has grown, we have been able to bring on some additional small family office investors, high net worth investors, and a lot of them are looking at rounding out their portfolio, their income portfolio. So yeah, it's a wide range of individuals that are invested into Farm Lending Canada. But as I had said earlier, we just need to ensure that the investment expectations of our fund align closely with the investment expectations of the investors.
Okay, excellent. So you touched on it a little bit before, but I would like to dig into it a little bit more. Do you want to speak about the results and, in particular, the net return track record of the AgriRoots Fund? I think that's an important one to share.
Thank you for the question, Tracy. As much as we all like to understand that our investment dollars are having positive impact and contributing to the Canadian farming industry, consistent returns are definitely a factor, and it's something that all of our investors are have top of mind. So I'd like to be able to get into a little bit of how we bring in investors first and discuss that timeline prior to getting to kind of the returns. So what we do through the AgriRoots Diversified Lending Fund LP and Trust is we strike NAV, so net asset value, at the end of each month, which resets every investor back to an equal $10 valuation per unit. And it allows us to bring in additional capital. So all new investment starts the first business day of each month. What the investment cycle is that we collect interest on the monthly basis from the borrowers. We strike NAV on a monthly basis, and we pay distributions quarterly. Investors may apply in order to be able to get redemptions on that same quarterly cycle. So 3 business days after we pay distributions, we pay any redemptions that are outstanding. But more specific is the returns. Since inception, the fund has consistently exceeded its hurdle rate. The management team, when we created the fund, committed to our investors that we would waive management fees and or share in the payment of any fees that are associated to the funds in order to ensure that investors continuously hit hurdle. So we would take measures in order to be able to ensure that the investors are getting what they expect and sign up for. That hasn't been a problem though. When we started the fund, as I mentioned earlier, we set interest rates and we kind of are able to project what the expenses are going to be in order to be able to ensure that the investor returns are stable and consistent. Over the last 12 months, the various share classes have returned to investors between 8.5% and 9%, 9.5%. So between 8.5% and 9.5% over the past 12 months. Over the past quarter, our returns are increasing a bit. They're ranging between 9% and 10.5% recently over the last quarter. And these returns are not, by chance. And I know that people may sit there and say, well, interest rates are coming down and why are your kind of returns going up? But what we've been able to do over the past 6 months is we've closed on 2 facilities with national lenders in order to be able to ensure we have we can manage our cash flows a little bit better. So with these leveraging facilities, we've been able to ensure that any of the mortgages that get paid out do not drag down returns. We can fund mortgages effectively as opposed to waiting for capital to come in through investment and or through payouts of mortgages. So we've been able to deploy a little bit of additional capital that from these financial institutions, all to the benefit of our current investors, which is increasing returns marginally.
Okay, excellent. So really, I'm sitting here thinking about this, and your individual is somebody that's an investor that says, I want a chunk, I want to be part of farmland, agriculture, real estate, but I don't want to go out and buy this land and manage the land and deal all this. I want to invest in AgriRoots Diversified Lending Fund, and then I get to be part of Canadian agriculture, real estate through that fund. Is that correct?
Yeah, I mean, they in it now, again, the benefit of doing it through a debt portfolio such as ours as opposed to an equity portfolio is within our investment portfolio, the risk is limited to the investor. So when we are investing, we're providing a first mortgage, first collateral mortgage to a borrower based on, their available credit and their scheme and their execution plan, and we're not 100% invested into it, and we're able to have liquidity in it in being paid out on the mortgage as opposed to having to sell the land. So the benefit for us, and as much as there are positives to both investment strategies, whether it be equity investing and or investing into the debt facilities. We just feel because there's definitely a need for both in Canadian agriculture. Our investment strategy just is a little bit different in the fact that you have a little bit less loan to value put against the property, and your liquidity to getting your mortgage funds back is easier.
Yeah, okay, that makes sense. You know what? I'm just trying to get in the headspace of the investor and then the farmers and then the different opportunities. So thank you for answering that. So you've chatted about this, and again, I'm going to go deeper because I think you may have something to add here. As we know, when you invest, there is risk. So how does Farm Lending Canada mitigate risk to investors? You just touched on it. Do you want to go there a little bit more?
Yeah, I think it's definitely one of the factors that every investor needs to take a look at when they're investing in any investment strategy, and as well as alternative financing, alternative debt. So there's a couple of ways that we prioritize risk mitigation here at Farm Lending Canada. So one of the ways that we feel that is very effective is we engage leading external service providers. So we're not a fund structure that does everything internally. We utilize industry leaders in order to ensure transparency and a little bit of assurance to a wide range to our investor base. So our fund structure and legal structure is done through Stikeman Elliott. Our mortgage subservicing of the mortgage portfolio is done through CMLS. The custodian of all the mortgages that our investors are investing in is Computer Shared Trust. We use an external fund administrator, which is SGGG Fund Services. So all of those partners work together in order to be able to work through the mortgages and ensure to our investors that they all are performing as being represented to them. So at the end of the year, when all of these service providers have put together the reports, and we've continued to send out the investor updates through our fund administrator, we have PricewaterhouseCoopers as our auditor. They audit the financial statements for the funds, and they report them directly to the investors. So the investors see audited financial statements from an external audit partner.
Yeah.
So all of those outside entities continue to take a look at the mortgages and the underlying assets that our investors are invested in. Another external group that is reviewing the portfolio on an annual basis is we have, as I had mentioned earlier, the two financial institutions that we have partnered with recently in order to be able to have the credit facilities. Well, they have independent third-party reviewers that come in and evaluate the entire portfolio and our operation on an annual basis and provide reports back to them also. So our investors can be assured that we are following the credit guidelines that are outlined in our statements. We are following all of the independent legal advice for our borrowers. We're following AML, so anti-money laundering practices and policies that we're required to follow. So they can be assured that we are operating within the proper measures in order to keep their capital safe. So that's one measure that I think we try to promote to our investors is to provide them some additional assurance in that manner. I would say a second is our robust credit policies and anti-money laundering policies. So a life of our mortgages is that the credit applications come in to our credit underwriters. Our underwriters follow our credit policies, our internal credit policies. They follow our internal anti-money laundering policies in order to be able to review the files. All credit applications then go to our chief credit officer for review. Anything that is supported by the chief credit officer, then it makes it to our credit committee. Our credit committee consists of 6 individuals, 3 of which are board members of Farm Lending Canada. And the escalation of this to the credit committee allows to ensure that all of the parts of the mortgage are reviewed. The application is pretty extensive, gets into the underlying asset, the underlying business plan, what the security package looks like. As I mentioned earlier, that we have a complete security package on all of our mortgages. What our investors will see is a loan to value, but that loan to value is only based on the arable land and multi-purpose buildings. But for additional security, we take any unencumbered machinery, we take security against inventory, we take security against available quota, we take personal guarantees from our borrowers. So we tried in order to be able to make sure there's a security package there, which will be very beneficial to our investors. We've helped over the past 6 years, we've helped over 125 Canadian farming families transition, and we've helped them with supported capital, and we've had no loss of principal or interest for our investors over those 6 years with those 125 families.
Wow, that sounds like a lot of checks and balances, which is good
It
to hear.
is.
Yeah.
And actually, another thing, the credit committee, when they're reviewing all of the details, they're reviewing these files against our current portfolio. So we have portfolio metrics where we try and maintain a proper diversification, even though we're invested solely in Canadian agriculture. Our portfolio, we look to be diversified across Eastern and Western Canada. We look to be diversified between cash crops, grains, oil seeds, livestock, so different commodities and because they all can be affected at different times.
Yes.
And we also keep our targeted weighted average loan to value quite low. So across our portfolio ranges on average between 55 and 58%, which gives us a significant amount of equity there to be able to work with the farmer and ensure a positive outcome.
Excellent. Thank you, Matt. This has been excellent. I have learned a lot and a lot of great information in here. So I think we've walked through everything that we wanted to talk about. If you have anything else to add, I'll give you a final spot here. And if not, can you let our audience know how to get in touch, the next steps if they're interested in learning more?
Yes, most certainly. I mean, as a conclusion, Farm Lending Canada and AgriRoots Diversified Lending Fund LP are proud to offer investors a well-governed, impact-oriented, historically stable return opportunity for investors to participate in Canada's essential agricultural sector. Through discipline, alignment, and deep sector expertise, we aim to continue to deliver consistent returns while supporting the future of Canadian farming. If investors are interested or potential individuals are interested in learning more about our product, they can do so on our website, sending in a form at www.farmlendingcanada.ca, or email me directly through my exempt market dealer email address, which was at belcopc.com.
Matt, this has been extremely educational, informative, and just value packed for our audience. So I just wanted to thank you for spending your time sharing information with our audience. Thank you so much.
Thank you also for having the opportunity.
You are so very welcome. You in the audience, if you want more information, like I said, head to Farm Marketer, find this segment, and also like it, share it, get it out there so other farmers can hear this great information. Thank you guys, and we'll see you in the next one. Bye bye.